Hello everyone, myself Vaibhav. I welcome all of you to today's session of Market Movers in which we will take a look on the USD which seems to be bottoming out closer to the low levels and now it is making the ascending pattern from the lower levels. So we will see if there are any emerging opportunities for us in these changing situations, the new circumstances to figure out if we can find the optimum entry levels. If you consider the trading context for the day, it's risk on sentiments prevalent in the equity segment and also in the commodity space, the crude oil prices are trading higher. There is this risk of the production outages due to the hurricane situation in the Gulf of Mexico that has also helped the crude oil prices and in terms of the equity we have this positive news flow coming in space of the coronavirus outbreak. There are some emerging treatments and also the vaccine process, the process to find the vaccine and that is also going on in a fast-paced manner. So we are here kind of seeing the favorable situations prevail. So I think in US session as well, we will see these growth in the valuations to continue. And now that we have got almost a percentage point gap of open, most likely we will see sideways momentum prevail, maybe with bit of bullish bias. Coming to the data docket, we didn't really get much of major releases for most of the economies of the world. And for US session, we had the Chicago Fed National Activity Index, and it is showing substantial growth here in the economic activity. Of course, if we compare it to the prior month of June when it was showing the record high of 5.33, it is lower and it is also lower than the expectation. But if we look at it from the historical perspective, then of course this is pretty high. But then we have to also keep in mind the decline which we saw in the prior months of the lockdown when it had of course fallen also at the record pace. Now moving on to the technical segment, here we will first see the Euro USD and then we will also take a look on the dollar index. Let's start with the Euro USD's technical outlook. This is the daily time frame chart and the Euro USD has been consolidating closer to this 100% Fibonacci expansion of its prior rally. This is the kind of sideways momentum prevailing in the Euro USD and after making a high pretty close to 1.20, the Euro USD found that sellers were willing to push it lower and after making a low below 1.18 it is now kind of trying to consolidate, but I think the near term bias has turned bearish. I'm talking about the short to medium term perspective, and from the longer term perspective the sentiments are still bullish, but given the fact that we have already seen these substantial moves here, we can expect this consolidation to last a bit longer, and during these times we can see if we can get optimum entries for the trading positioning in today's session. So coming to the lower time frame chart of 4 hourly, we have this regression curve which has now bent on the downside as the price action has tended to trade in the sideways range with range being around 200 pips. Here in yesterday's session, that is Friday's session actually, we had seen the Euro USD rebound close to 1.175 and now it is almost 100 pips above those levels. But if we see this formation, I think this immediate swing high which is there around 1.187 is going to be of crucial importance, and unless and until we see a clear break above that, we can continue to look for selling opportunities in the Euro USD here. And of course we have to be mindful of this fact that the price action is still taking place in the bullish environment from the longer term perspective. So because of that, we have to make sure that our stop losses and target prices are more of scalping kind rather than big swing trades. So we will try to see if we can get sharp entries here. Coming to the lower time frame chart of hourly, we have this immediate resistance formation around this 200 and 100 SMA area. We have this 1.185 to 1.186 zone, which can act as a near-term resistance for the Euro USD's price action. And as I said, we can use this prior swing high as a crucial marker for determining whether to go whether to go short or just to sit on the sideways. I'm not kind of advocating to go long unless and until we see a fresh formation of higher highs and higher lows on the hourly chart. Right now we have this formation of lower lows and lower highs. So in keeping with that, we can continue to look for sell opportunities here. And I think if we see that for next couple of hours, if the price action doesn't move much and we see the resistance coming into play around the current price zone also, we can go for a fresh short sale opportunity, short sale trade on the current prices, as we have this retracement already in place. The price action has retraced quite a lot from the recent lows, and after due consolidation we can expect it to again drift on the downside and break below this prior swing low. And for that we can utilize this formation where we have 50 SMA below this 200 SMA zone, and also it's increasingly looking probable that we will see the 100 SMA also crossing below the 200 SMA unless and until we have a sharp move in the Euro USD on the upside. So keeping that in mind, we will continue to look for selling opportunities around the current prices of the Euro USD if things hold around this area for next couple of hours. And I think the stop loss can be in the vicinity of 1.19. So for a entry anywhere close to 1.185, the stop loss of 1.19 should work fine, and on the lower side we can target the prices of 1.175. So in this manner we will have the stop loss to target ratio of 1:2, and conservatively speaking that should be pretty good from the trade setups point of view. Now coming to the dollar index is also showing similar signs of consolidating on the lower levels, and it has been finding support closer to 92 zone, and for last couple of sessions it has traded in a very narrow range. Of course, from historical perspective the range is still quite large, but compared to its prior days, just a month or two back, we have indeed these range bound moves happening on the lower levels, and it is finding support coming in around 92 area. We are trading close to this 161.8% Fibonacci expansion of its prior fall, and here if we see that the dollar index is able to hold on to these levels, then we can pretty much expect the rebound to happen in the dollar index, which might eventually take it even above 94 and closer to this 95 zone in coming weeks, if not days. So looking at that possibility, I feel we can continue to look for buying opportunities in the dollar index. And here we have this pivot point series, which is still bearish, and the next support, that is the S1, is around 91.45, and we are almost 140 points away from that, 140 pips away from that. But if we consider the regression curve after this steep fall, we had this price action which traded in a range bound manner, and I think it looks quite probable that after this long consolidation phase, we will see more pronounced retracement happening, and as I said, we can target the levels of around 94 to 95 on the higher side, and that is where we have this immediate resistance zone of the central pivot point of this month's pivot point series. And I think that is the area to look out for, to watch out for. And for that, for fresh trading opportunities, mostly we will have to rely on the hourly time frame here. In Friday session, we had this sharp move in the dollar index, which took the dollar index from the levels close to 92.6 to 93.4. Now we have seen correction in today's session, and again the dollar index has pretty much been trading closer to this lower band of this upward moving price channel, and it is kind of giving us the fresh opportunity to get involved for the fresh trade setups in the dollar index by using the strategy of buy on dips. So unless and until we have a fresh break below this immediate swing high, swing low, which is there around 92.5, I feel that we continue to keep searching, keep looking for the opportunities to go for the buy trade in the dollar index. And on the lower side, we have this 100 SMA zone around 92.75, and a stop loss of anywhere close to 92.40 should work fine. So if we are able to get an entry point anywhere in the price band of 92.80 to 92.9, on the higher side we can target the 94 zone, and if we are taking the risk of around 40 to 50 points, we will have to target almost closer to the 100 pips on the higher side. So keeping that in mind, if we are going in for a entry closer to the 92.8 zone, I think we can target around 94 area on the higher side, and that will also give us a good risk reward ratio, and that will be most probably be fulfilled if, as we have anticipated, if those conditions hold well, if the analysis holds well, and if we see this continuation of the buying momentum in the dollar index from this oversold situation. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.